What is up, everybody? Happy Friday, and welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what's going on in the space. And as my title says, what is my title? Bitcoin at 90,000. Is this the bottom or a launchpad? Why am I thinking this? Well, this past couple of weeks, or really only this last week, I started noticing a lot more layoffs happening in companies, and I've been covering the news for the past 4 years, and I'm just seeing some correlations that come together. It's what happened back in 2021, 2022, when we had that FTX collapse, markets were going down, and then all of a sudden it was layoffs were happening. How did that correlate? And that when I was thinking about it, I was going, that's kind of the same time the bottom hit when Bitcoin was at 23. No, it went down to 16,000. So, but it was in that time span. So it's where are we looking at for a time lapse and when we could start going back up? Well, I can't give you an exact answer for that, but I'm feeling that what if 90,000 is our new bottom? Imagine that 2022 we had $16,000 for a new bottom for Bitcoin, then we started climbing up to the all-time high of 126. Then October 18th, 13th happened. We went down from 126 back down to 70,000. So we did have a dip. Now we're back up at 95. People were buying the news, and now they're selling the news because all last week we had Venezuela, president was taken out. We had not taken out, but removed from Venezuela. We had bullish news about Trump tariff, having maybe a reimbursement, some money printer go burr, and then we had the market structure bill. So it was a lot of buy the news. It's because we don't know, if everything passed, prices would have kept going up. But since then, we had a delay on the market structure bill and also a delay on the Trump tariff. So again, people are starting to sell. If you can take a look at the price right now, we are currently at 95. We were going this last week from 90,000. I was hoping that we would have hit beneath 89, but it looks like we almost did at one point. But no, then we started spiking up to this high, and then once we got all that news, yep, people are going. But what if 90,000 is it? But again, I was talking about the companies that are doing layoffs right now. We had popular crypto firm announce layoffs after token disastrous drops. So which company was this one again? Mantra. So the Mantra, a popular one blockchain firm focused on real world assets, announced a company-wide restructuring on January 14th. So this is recent. This was 2 days ago. So they were going through a round of layoffs. Started seeing Polygon getting rid of 30% of their workforce. So Polygon trims workforce amid $250 million stablecoin payments pivot. So I guess this is the news revolving around that. And then even Meta, the metaverse hasn't really taken off, but Mark Zuckerberg's company Meta had a fresh layoff triggering major sell-offs with their company. So I was just going, we had a lot of layouts. What did that really mean? Well, again, crypto usually sells off first and then stabilizes, but then recovers before the broader economy does. But layoffs are usually the late stage in the economic signal out there. So obviously, by the time we hit the headlines we just saw, the markets, especially crypto, have often already priced in much of the bad news. So I don't think we could go lower. But again, we still could. I was listening to Ivan on Tech this morning. I took a look at his day chart, his charts too, and it's he's looking where the 200-day moving average is. We are still, it's still low. It's down at 57,000. So we could still hit that area down there. It's a probability that can go low. But until that moving average moves up, aligns with the 50-day moving average, then So again, we still have that gap, but where is our bottom going to be here? But what else did I see for you? I pulled up even ChatGPT to answer some of these questions. What really happens because of it? Well, layoffs begin, risk assets drop. When companies start announcing layoffs, fear spikes, retail investors pull back, and crypto, being a high beta risk asset, drops fast. But again, we saw this happening in 2018. Well, I wasn't a part of that one, but the 2022 and tech macroeconomics. So when did that really happen? So policy response because of that, usually we get rate cuts, quantitative easing, fiscal stimulus, but the recovery phase of after this, that we're experiencing this now. So once easing begins, Bitcoin will rally first, and then the altcoins usually follow later if we do have an alt season, who knows, and then employment recovers. But this is why Bitcoin often bottoms while layoffs are still rising. So we are bottoming in that area. And here are the examples. So the 2018, 2019, I wasn't involved. I know my dad was involved in crypto at this time, but layoffs plus tightening equals Bitcoin bottomed late 2018. Fed pivoted in 2019. Bitcoin doubled before stocks caught up. And then the one I was around for that was seeing all the news articles came from 2022 to 2023. Massive tech layoffs from Meta, Amazon, Google, and we just got some layoff news from Meta again today. And then Bitcoin bottom in November of 2022. And that was when we were, at the $16,000, $17,000 level. I remember that. And then layoffs continue well into the 2023. So there was a full year of this. So we may experience a full year. So these jump up Launchpad might not just happen right away, but like 2026 could be, again, we still have so much adoption going on that it might happen a little bit faster than what it previously did. Because back in 2022, 2023, we didn't have this huge adoption. We didn't have a pro-crypto president. We didn't have governments trying to actually come up with policies around cryptocurrency. So there's a big change going on for how fast we could potentially go back up, and where we would go, 150, 200,000. Like, these are potential possibilities for this year and next year for where we go. I don't know when it's going to happen, but it may happen way more towards the end or maybe halfway point of 2026. So who knows? We just got to wait and see. But that is why I'm still bullish on Bitcoin. And I'm just wondering, it's like, is this the bottom? If so, I'm excited about that. Because again, we've always talked about, like, I'm not sure me, but in the community, we said Bitcoin will experience lower lows and higher highs. And it feels like we are literally living that right now. So, all right. So that's my thoughts on why this could be the Bitcoin bottom. Now let's cover some actual news and more adoption wise. Just a quick little handful of small, short articles because, again, sorry for being late. Lots of meetings this morning. But it looks like we had an update within an Arizona bill that's advancing. So Arizona advances bill allowing state agencies to accept Bitcoin for payments. This is Bill SB 1043. It passed a second reading in the Senate, which would authorize agencies to accept Bitcoin for taxes, fees, and fines to convert crypto to USD and then to settle the state's obligation. So it'd be nicer if they would keep it and put it in the reserve, but they're adding the ability to pay at least your taxes, fees, and fines. Like, so you got a street sweeping ticket, man, I hated those in California. You'd be able to pay in Bitcoin, but it's like that type of thing. Like, this bill's getting pushed through. So hopefully, if this one does get passed and becomes an actual bill and law, then maybe the next step would be, okay, instead of converting to USD, we're going to keep it in Bitcoin and hold it as a reserve. So I'm hoping that does take place. So Article 2.2, Strategic Bitcoin Reserve. Oh, wait, so is that, hey, I didn't actually even read this. So be enacted by the legislature of the state of Arizona, Section 1, Title 35, Chapter 2, Arizona Revised Status is amended by Article 2.2 to read the Strategic Bitcoin Reserve. So public money's investment, virtual currency, reserves, and definition. So in addition to the investment authority in Article 2 and 2.1 of this chapter, a public fund may invest in more and not more than 10% of the public monies under its control in virtual currency holdings. So okay, is this still talking about the actual Bitcoin reserve? Because again, like, there is like a limit to like what these states can actually put on the reserve. Like, the requirements I think I always say is like Bitcoin or no, the cryptocurrency has to have a market cap of above, usually it's $500 billion, and I've held that for at least over a year. And as of right now, that's only Bitcoin with a $1.9 trillion market cap, and it's held that for years. But Ethereum, it's almost there. It can almost meet that threshold, but if it wants to be able to be a part of a strategic digital currency reserve, it's got to hold that 500,000. But I believe this was just really stating some Bitcoin right now. But yeah, every bill is kind of different right now for what the requirements are to actually hold it. But that's pretty cool that Arizona is advancing. So again, we're getting more advancements here in the states of just like whether it's a state or the entire all 50 states out there. So like, advancements are happening, and I love seeing it. And then, again, what else? So outside of Arizona, we have West Virginia lawmaker introducing a bill to allow state crypto investment. So this is an actual article we're going to read together and hear about this. So the legislation would allow the state's treasury to hold digital assets with a market capitalization of more than $750 billion, which applied only to Bitcoin as of January. So West Virginia State Senator Chris Rose has proposed legislation amending that the state's code to allow the Treasury to invest in precious metals, certain digital assets, and stablecoins. So in a bill introduced to the West Virginia legislature on Wednesday, Rose proposed that the state's Board of Treasuries be allowed to invest in precious metals, digital assets with a market cap of more than $750 billion. Like, see, like, everyone's got a little bit different things. So 750, and again, when we looked at the charts, that's only Bitcoin. 1.9 trillion. Ethereum, Tether, BNB, nope, doesn't meet that requirement. But it's from the previous calendar year in stablecoins. Now, the bill called the Inflation Protection Act, if passed and signed into law, could give the state treasury exposure to Bitcoin, the only cryptocurrency to meet the market cap requirement as of January. Now, here is the West Virginia Legislature 2026 regular session introduced Senate Bill 143 by Senator Rose. So, according to the text of the bill, any digital asset acquired by the state's treasury could be held by a qualified custodian in an exchange-traded product or through a secure custody solution. Now, any stable coins acquired would need to have received regulatory approval from the U.S. government or individual state governments. Now, several U.S. states have proposed similar bills allowing the government to invest in Bitcoin or other cryptocurrencies. Now, although many lawmakers introduced legislation in 2025, only Texas, Arizona, and New Hampshire have passed these laws allowing the state-level crypto reserves right now. Now, it's unclear as of Thursday whether Rose's bill will have enough support to pass the West Virginia legislature, and lawmakers referred the bill to the Committee on Banking and Insurance. Now, the U.S. Senate delayed its market structure bill. I believe we covered this yesterday, but the West Virginia bill was introduced as lawmakers in the U.S. Senate postponed a markup for legislation to establish digital asset market structure in the United States. Now, the legislation was called the Clarity Act and has received criticism from many industry figures over provisions on decentralized finance, stablecoin rewards, and the role the U.S. financial regulators would have in overseeing the digital assets. So really it was it's like the rules were like basically Coinbase withdrew it, and that's all about like stable coins producing yield. Like really only the banks would be allowed to do that. So Coinbase doesn't play effect. And I believe the banks did that because again, that would like pull $6 trillion from like their level of marketing. So again, the bill was great for Bitcoin and banks, but not other cryptocurrencies. So that's why Coinbase and other industry leaders pulled out from it, if you didn't know. But yeah, so this is West Virginia, though, allowing a bill to accept the state to accept crypto investments. But again, this for West Virginia has to be $750 billion. I believe like Texas and New Hampshire were $500 billion, and then Arizona did not give us a number for if they could say it, but we'll get more information on that. But that's our West Virginia news and just basically more adoption happening in the States, which I love. Now, also more adoption news on how banks get the green light to enter crypto flows. But what's next for the crypto infrastructure? So banks are getting on board. Like, what does this really mean? It's like, are we getting centralized? Is decentralized going away? But really, what does this mean for crypto in general? So let's go through this article and hear what Crypto News has to say about it. So crypto is starting to look less like a parallel system and more like part of a mainstream finance. Banks are now officially into the flow of it. So they got the green light now. And in December of 2025, the U.S. Office of the Comptroller of the Currency, OCC, made the call to allow banks to act as intermediaries in crypto transactions for the first time. And now banks are being explicitly allowed to sit inside the transaction flow itself, not just as a custodian or a compliance gatekeeper, but as an intermediary that facilitates execution. So this is a notable step forward, and it fits with a broader regulatory trend we've been observing in the US for some time now. Crypto is being increasingly moved out of the gray zone and into a supervised bank-compatible infrastructure. Now, throughout 2025, the country's regulators have been taking steps to clarify how incumbents can interact with digital assets instead of still trying to keep them at arm's length. Now, the message is clear. Crypto activity isn't going away, and the goal now is to integrate it into the existing financial framework with guardrails. Now, from this point of view, allowing banks to act as intermediaries lowers a prominent psychological and operational barrier. Banks can now actively facilitate trades while remaining within a regulated, risk-controlled model. Now, this shift is going to have a long-reaching effect on how the entire crypto infrastructure evolves next. So what does this mean for adoption and everyday users out there? Well, from an adoption standpoint, this is an obvious positive. For years, one of the crypto's biggest challenges has been onboarding users who are not crypto native at all, and that is true. It's not so easy. For many people, the friction starts at the moment they have to leave their familiar banking environment and then interact directly with some exchange or on-ramp service that they just do not fully understand. So that's kind of like the hard point. Like, it's like, okay, you need to sign for Coinbase. You need to sign for Uphold. Oh, do you have a Cash App account already? Then this makes it simpler. But that's like a barrier to get people onboarded. But if banks can intermediate crypto transactions, then that journey becomes much simpler for these people. Digital assets start to look less like a separate universe and more like a natural extension of digital finance. Now, this is good. This is a good way to bring in users who are not just crypto natives, but they are interested in exploring this asset class. And these people tend to be more comfortable using banking apps and cards. So enabling access through those familiar platforms arms them with greater confidence. And again, yeah, keep them like useful, because I'm trying to think of like how tough was it to go back in the day from checks to cash to actual cards. I remember seeing videos back in the day from like Burger King's accepting credit cards, and all the people there were going, man, this seems sad. You got to use credit to buy a burger, or I hope this doesn't slow up the lines. So it's just like the transition process. So they got to use something familiar with it, and by banks doing so, it's gonna be allowed. But institutional confidence follows proven infrastructure. So, institutional comfort is another aspect where the familiarity of traditional banking structures serves as a positive addition to the crypto adoption process. Now, large asset managers, corporates, and wealth clients tend to move when infrastructure feels stable, audited, and predictable. Now, banks provide exactly that. By stepping into the execution flow, they effectively act as a bridge between traditional capital and crypto liquidity. Now, this could unlock new institutional flows, especially from parties who were previously hesitant to step into the crypto landscape due to operational and regulatory uncertainty. And over time, we are likely to see more consistent participation and deeper liquidity growing from the OCC's decision. Now, how compliance issues will be tackled? So, I have previously observed a prominent worry from some industry participants that bringing banks deeper into the crypto flows will mean a drastic increase in the compliance and operational burdens across the board. Now, in reality, however, the shift won't be as big as many might assume. The majority of properly licensed crypto businesses are already highly compliant and operate on a level close to bank grade standards. Now, there will likely have to be certain adjustments, but nothing a good fintech cannot adapt to. So, this will make forming partnerships between the two camps much smoother and seamless. For mature, well regulated crypto firms, this will just simply be a natural extension of systems that they already run. Now, why do banks exchange partnership or why bank exchange partnerships become inevitable right now? So all of this leads to one clear conclusion: closer cooperation between banks and crypto platforms, bringing a sense of greater legitimacy at scale, and it pushes the crypto industry to mature operationally. Now, I believe that as this paradigm evolves and stabilizes, we're going to see a kind of convergence. Banks will move deeper into the crypto markets, while crypto firms will step further into the banking space. Now, as the overarching financial infrastructure continues to change, the lines will become more blurred. Now, some banks will undoubtedly seek to acquire crypto capabilities, while crypto platforms will pursue banking style products and licenses. Now, the biggest winners will be those players who can pivot quickly and adapt their business models to operate comfortably across both worlds. Now, if done right, this model can realistically benefit everyone. Users get easier access, institutions get familiar risk frameworks, banks get new revenue streams, and crypto platforms gain stability at scale. Now, the OCC's decision doesn't mean crypto suddenly becomes simple or risk-free. What does it mean? It means that the industry is entering a new phase of adoption where banks, crypto firms, and regulators are collaborating to build workable models together. And again, this is great news again, but this is for the centralized side of cryptocurrency. Again, all hence was what was also in the market structure bill was like talking about DeFi and like getting all those records linking together. It's like you can't touch DeFi. It's like there's nothing attached to it. No name, no email, no phone number. There's no KYC when you have your own self-custody wallet. So that definitely had to be changed out there. But this is bullish on the centralized side because again, most times when you're getting crypto, you gotta enter on the centralized side because we don't have just that peer-to-peer transaction. It's available to us. You just go up to any friend with Bitcoin. It's like, hey, mind if I give you $20 and you send me $20 worth of Bitcoin? That's a peer-to-peer. You can do that, but it's not so fluent out there. So most of the time, if you need to buy a large amount, you either got to go to an exchange or over the counter, or even through us at Bitcoin Ben's Crypto Club. Yeah, we have the confidential bulk purchase program for you. But no, it's like, so you got to go some way to purchase your crypto. So this is going to make it a lot easier on the centralized side and just slowly build out. Because once people are in it, you can do whatever you want with your crypto. Hence the bank's rules and everything. Who knows what it's going to be like? Oh, you got a limit. You can pull out this much right now. Or it'll be just exactly the same when you try to move normal money. They ask you a buttload of questions and eventually, maybe, hopefully, you can get it off into your own wallet. So as we still evolve in the space and everything, just never forget the importance of self-custody. Why we're in crypto and Bitcoin is just we want to be self-sovereign and not have to rely on the big tech companies, banks, institutions, and governments out there. We want to be in control of our own life and finances. So as we evolve into this, and if you're brand new, start learning about self-custody, DeFi, what Bitcoin really means, and like what it's doing, and then that should and you should be all right as we advance forward in this world with crypto, banks, governments. Like, you will be just fine because you will be in full control. And if you do need help, give the clubs a call. We have consultants here to help you out. But that's about it. We just got one more news article. Really don't need to cover it, but we'll mention it. It's how lightning strikes twice, because it's a very rare when these happen. But a solo Bitcoin miner beat the odds, or two Bitcoin solo miners beat the odds and solved a block in the blockchain. One earning 295,000 and the other earning over 300,000. So yeah, two solo Bitcoin miners struck rare wins this week, each earning nearly $300,000 as the US mining dominance continues to slip. So yeah, we had two solo Bitcoin miners that independently mine blocks and won rewards of about $300,000 each. Full payouts are rare amid mining dominance, but solo wins still happen occasionally. And U.S. mining shares fell over the last year as the firms pivot to AI, with China grabbing more shares, so it kind of made it a little bit easier, or the odds lower. When you have one of these micro Bitcoin miners that's running in your office or whatever, like, that's like a 1 in a billion, 1 in a trillion. It's a high number for you to actually win it. But when it does happen, it's kind of like a lottery ticket. So when did these two solo miners solve the block? Well, let's see. This was preceded. So another solo miner successfully minted a block on Tuesday, earning a payout valued at 295,000. Instead, each miner received the full payout, which is a rare outcome given the dominance of the large digital scale mining operation. So the first one happened on Tuesday, and the second one, early. Wait, is it Friday? No, today's Friday. I was about to say this morning. Early yesterday morning on Thursday, a solo miner landed a 3.157 Bitcoin reward, including the fees. And that was worth roughly $304,000 at the time. So, yeah, so these are rare occasions when they do happen, but they do happen. So I always recommend somebody get themselves a solo Bitcoin miner. And like, there's so many out there. Like, let's go to Amazon. You can even buy one off of Amazon. Like, let's go here. And like, let's see, BitAxe is usually a good one. So let's see. Bitcoin miner. Let's see what they're going for. Lintudo Bitcoin miner BTC. That's a $36 one, so a little smaller output or energy can do, but it's like these are little lottery tickets. So like $35 to, let's see, air ticketing Elon 3S Bitcoin miner to $359. So you don't need these huge Bitmain miners like that take a lot of energy, produce a lot of heat. Just like run a little BitBax miner. We do have one here at the club. I haven't set up still, but these are like $100. You can get a $20 one, $100 one. Just start running it, because then that way it's like just a little extra lottery ticket. If you win, you just got, as of right now, 3.125 Bitcoin, or 15 Bitcoin. In 2028, Bitcoin halving occurs, and if you happen to be a solo miner and win it, now you're winning 1.5 Bitcoin. So because the halving event goes down, but again, though, also, like, it's not just a lottery ticket. Every single Bitcoin miner out there is making the network that much stronger. So that's also another incentive. If you're a Bitcoiner and you want to see the network still grow, you want to make it as safe as possible, run your own node and run your own miner to help secure the network just that much more. So that is it for the news today. Again, guys, sorry for being a little bit late. Sorry for this camera always getting blurry on you guys. I gotta upgrade this one I have here in my office. Just get a little bit better for you. But yeah, that's all the news I have. Again, like, is this the bottom? I really hope so, because I would love to see 90,000 being the bottom. But as we look at the 200-day moving average, there's still like room to go down a little bit more. How much more? Well, that 200-day was at 500,000, right? Where was that again? We're at 57,000 for the moving average. So we're keeping an eye on these two. Like, if we zoom back, like, what is it? A week span? Daily, yeah, the daily, like, it's just the death cross position where it's not so bullish. Because of that, we're beneath it. If we're above it, that would be bullish or bearish. I gotta go back to my notes to see to be able to read these technical analysis. But where are we at fear and greed index wise? People are back down to neutral. So we jumped above greed territory for just a little bit the other day, but it takes, because of the delays with the market structure, the tariffs, and all that news, like, it's so fast for people's like emotions to like decline. Like, we were at 59, 60, and then all of a sudden, bam, we're back down to 50. So people are just neutral right now. We're seeing what's happening, but again, I'm feeling that we are in a sell the news aspect right now. So we could go down a little bit more this weekend. How much lower? Who knows? Are we going to touch 90,000 again? Is it just going to go down to 92, 91, like where we were beforehand? don't know, but I'm just feeling with the news right now, it's like it's a sell the news. People want to get out because they were hoping for a bullish momentum to happen. But anything can happen in this space. Some huge news article comes out and then spikes the price back up to $105,000, and I would love seeing that as well. But that's it for the news, guys. Sorry for being blurry again. So, guys, yeah, don't forget to hit that like and subscribe on your way out. I hope everyone has an awesome weekend. And yeah, just stay safe out there. Let's keep stacking our sats, and I will see you next week with some more crypto news. So peace out, guys.